Joining us now to kick it off, Chris Grisanti, Chief Market Strategist, MAI Capital Markets. Can we square those two things? Maybe we can, because I've been around long enough to see stocks go up even when people say valuations are high.
No, I'm saying maybe we can, maybe we can't, but we have to. So the deal is, us value investors,
we have to do anything.
Yeah, you can't sit on the sidelines here because there's too much bullish short-term momentum. And the reason that's happening is real things. It's not just technical. Take four tech companies: Microsoft, Amazon, Meta, and Google.
Heard of them?
Yeah, you've heard of them. $360 billion of capex this year alone. That used to be the size of a stimulus package in front of Congress. I mean, there is just so much cash behind spending, behind this economy, that it's really tough to sit on the sidelines. And if you do, I think you'll be a little bit out of luck.
I have another theory that's not getting a lot of attention, maybe because it's complete garbage, or maybe there's something to it. Stock buybacks. Corporations buying their own equity are also at or near record highs. And I wonder how much that is kind of the grease of the engine of this market.
I don't think it's as much as you might think, because what I'm seeing is things like Bullish, the IPO, that, as we were just talking about, is the final ingredient in my mind to what you need to make a bubble. So you've got momentum, you've got the buybacks, but you've also got the FOMO that's really working, and investors that had been cautious are now throwing their money in.
Okay, so you said it's the final ingredient to what may be a bubble. Right. But that doesn't, let's say the markets are in a little mini bubble, okay? Well, and let's just say there's a lot of people out there I know watching and listening that are nodding their heads right now.
Sure.
They agree.
Right.
But that doesn't mean, again, stocks can't keep going up.
No, and look, I'm a value guy. I would love to sit back and watch this bubble play out, but that's not how you can invest. What you do is, the good thing about bubbles is the cash goes one way and leaves some sectors high and dry, like healthcare. And that's where you should be invested. You've got things like Eli Lilly that sold off for, in my mind, no good reason. And that will do great if the market rolls over and people are looking for a defensive haven. So stay invested, but go to where the cheapness is.
Well, there was a lawsuit in Texas around Eli Lilly. I don't know enough about it. I don't want to go down that road at all. But I do want, you probably heard this yesterday on CNBC. Rick Reeder of BlackRock helps oversee trillions of dollars.
Right.
He came on.
The next Fed chair, by the way.
But that's the next segment, Chris. Don't front run the rundown.
Yeah, okay.
Rick Reeder said this on CNBC yesterday.
You said this is the best investment environment ever.
I think that.
You mean that?
I do, because, and by the way, it doesn't mean necessarily everything's going up, but there's a couple of things at play that are pretty extraordinary. First of all, you take the equity side. First of all, technicals and equities are crazy. I know we've talked about it before. Amount of cash on the sideline, the amount of buybacks relative to the IPO calendar, i.e. the demand versus supply, is pretty extraordinary.
Is this the best investment environment ever?
Well, ever is a long time, I think. But what I would say is, if you're thinking of, say, paying down a mortgage or something like that, don't you want to be selling stocks when there's no clouds in the sky, when the Fed's going to lower rates, when all these great things are happening and you and I are talking about them? This is the time when, a year, 2 years from now, you look back and say, gosh, I wish I had taken some money off the table then. And so I think Rick is probably right. It's a terrific environment, but the market looks forward. It doesn't stay in the present.
Okay, so what's the biggest risk?
I think the biggest risk, frankly, is economic slowdown. You saw it in the job numbers that were revised when the poor woman lost her job. And what I think might happen is tariffs catch up with companies that have been kind of like deers in the headlights and afraid to make capital allocation decisions. So I think that's the biggest risk.
So is this kind of like then a hold your nose rally? You said people are they're skeptical, but you have to do something because stocks just keep going up.
Right.
You can hate it. You can disbelieve it. You don't have to believe it. Valuations can be what they are.
Right.
But every day, if you're not in this market, you're watching the market or watching other people, hopefully watching us, and you're thinking, well, shoot,
here's a dirty little secret, though, Brian,
don't tell anybody.
Which is that individual investors actually have an advantage over institutional investors in a way. You can afford to underperform for a little while. And what I mean is, go to the safe place. If Lilly doesn't go up as much as Palantir for 6 months, that's okay. But the dirty little secret is that you make more money by avoiding disasters than you do by picking the next successful.
Well, you also don't get